This is Sunday, January 31st, and let's review a new stock, Progress Software Corp. This just came in as a tip from Zach in our comment section, and he has a knack of picking stocks that I haven't noticed, and they typically do pretty well. So let's just do the typical dive into analyzing a brand new stock that we know nothing about. First of all, go to Google. PGRS, Progress Software, currently trading at 40.18, down 2.3% yesterday. Let's not look at the charts. We're going to look at the charts later. This is what they do, okay? They create and deploy business applications. They've got a bunch of different subsidiaries that we could look into. Do analysts agree on the software target price? Well, for that, we're going to look at tip ranks. But first, we're going to go into FinViz. And we're going to take a look at PRGS and FinViz and look at its chart. It certainly has had a pullback. And let's do a fib analysis on that later when we get to the chart. And let's look at what kind of moving averages it's getting support at. Now, its market cap, it's a very small company. It's under $2 billion. Their income is under $80 million a year. But their sales, almost $500,000. Book to share, 7.74. They do pay a dividend, surprisingly enough. They have 2,000 employees. You can buy and sell options on them. Their insiders own a number of stock. They seem to be selling. Institutions own 98%, so there's not a lot of stock to buy. If you want to buy stock, you're going to have to buy it from an institution, and they are not trading it very heavily. So it's got a great gross margin, of course, because it's a software company. It pays out 37% in their dividends, which isn't bad. They have 44 million shares outstanding. Most of them are already issued. Okay, so they have very few shares that they're holding on to. If they've done any stock buybacks, maybe that accounts for the difference. And their short is only 2%, so not much. But it looks like an interesting company, doesn't it? I mean, all of the financials are pretty good. Let's now go look at tip ranks. And tip ranks only has 2 analysts that are tracking it. And the analysts give it a target of 55. Both of those analysts just came in 16 days ago, and they're both 5-star analysts. Daniel Ives from Wedbush says it's a buy. Here you can read why. Mark Chappell, who's a 4.5 from Benchmark, says it's a buy, also giving it a 37% upside. And let's see why he thinks that. Oops, sorry, that was the follow thing. Well, we could drill down. Let's just take a look at Daniel Ives. He rates Apple as a buy. He covers Tesla, Microsoft. So he really covers software companies, but also Apple and Tesla. He has a great success rate, 33%, but let's just say that's with no benchmark. But how is he doing against the S&P 500? He's beating the S&P 500 over the last 2 years by 36% with a 68% success rate. So that's pretty impressive. He's rated Progress 3 times. He said it was a buy here, a buy here, and a buy there. And we can read the article and find out why he's saying that. And I'm going to, if you want to pause now, you can read what he has to say. Now, I know you don't all have subscriptions to tip ranks, so I'm going to pull up Mark Chappell, and he has had 17 ratings. So he's been following this for quite a while, but the last 2 have been at 36, 38. Now he's saying it's a buy again. Let's read his most recent article, and you can pause now. That's not telling us very much. In fact, it's not telling us anything. So now let's go back to tip ranks. No, we're finished with, let's go back to tip ranks and see what else we can learn here. We can learn about their dividend. The next dividend date comes up this month. It's only 17 cents. They've been paying dividends for 4 years, 1.74%. They've been pretty consistent with their dividends. They're their smart score, read all about their smart score, is a 6. Now in reference, Apple is a 10, of course. Investors, here are some of its investors and their track records. So 3 of them have closed out in the last 2 months. Last month, 4 days ago, somebody bought a bunch. We can read what bloggers are saying. Let's see what insiders are doing. And these are uninformative, so they're probably just issued stock and then they turn around and sold some of it. This is an informative sell. So this whatever this order was, this was not linked to any of his stock options that were vested on that particular day. He just yanked some out of his account and sold them 4 months ago. So they haven't really done anything. Perhaps they were, well, let's look at where they were 4 months ago. Here's your news. Your news sentiment is average in the last 7 days. It's getting more positive. Probably not a lot of news. The hedge funds, Joel Greenblatt, very well known, has added $1.34 million, very small part of his portfolio, as you would expect. Ken Fisher sold out of it. We don't know when. And Andrew Law sold out of it. We don't know when. We don't know when these were added. But you can research into those. But the hedge fund confidence seems to be very negative. Let's now go look at the chart, because this is what we're really interested in. It's pullback. Let's look at over a big time frame here. So we've had 1, 2, 3 lower highs. Not a really good thing to have 3 lower highs like this. That's not even a fair trend line, but let's just point out that when it gets the MOMO, the market momentum, it really rockets up. And we had more market momentum here, which continued, but then it had a big fallback. More market momentum here after this huge gap because it came in April, likely earnings. This was January, probably not earnings. Big rocket up. Recently a rocket up, but when it goes down, it doesn't go, except here, it went down faster than the market, and here as well, it went down faster than the market. Now this, it hasn't here. Now it stopped right at the 200, so that's telling. We want to wait and we want to see some bounce off of the 200. Let's take a look at the Ichimoku. Ichimoku is really interesting. So let's just look at where we are now. So when we came to find support on the 200, we went right through the cloud. Has the cloud been a good predictor for this stock? Well, it looks like it has. It looks like when it has resistance, it's getting resistance on the cloud. When it's piercing the cloud, it's doing so at an area of very little resistance. Here the cloud provided some support, then some resistance. Here it definitely provided some, it really did suck it back into the cloud. So the cloud is pretty good indicator for this stock. Look where the Chiku span is. So we had 2 things happen at the same time. Support on the 200, and those who are Chiku span traders were buying it on support of the 50 SMA. So there's a couple of things you want to watch here. You wouldn't run out and buy it tomorrow, but you'd want to watch that is support and that is support. Both of them very important. So now let's just go back to no studies here. Let's take a look at some Fibonacci's. And let's take a look at some, let's look at this wave here and see if this, this is a stock that trades on the Fibonacci's. So let's go down and let's do this particular wave here. And we can see that it's sort of a Fibonacci trading stock. I mean, if you modified and you said that your low was the thing really started from here, you've got 78.6. You've got 38.2. I don't like these Fibonacci's. I like more 27. I don't know why it's giving me that one, 27.2. And is this Fibonacci still any good for us? No. So let's forget that one. Let's look at this wave here, and let's do a retracement on this wave. We had that one pop-up, and we had consistently some lows here, so that's probably a good place to pick. Let's do a different color here. So let's go to a preset of green. Oops, sorry. Now let's pull that over, and let's see if we're getting some, look at that, 27.2. 1, 2, 3 times. Resistance at the 50. Couldn't pull up above the 78.6, but now it's come back to the 50%. So we've got a lot happening. We've got, if we put in our moving averages, we've got support on the 200. We've also got the 50% and the 200 right at the same place. No coincidence. That's important. So where do we want to buy this stock? Clearly we want to see a bounce off of the 50. I'd like to see 2 days of consistent move up and then buy somewhere on the second day in the afternoon or the third day. Are there any other things we could look for? Well, we could look for a Gartley pattern here and see if we've got a harmonic happening here, and we do. And look, we had a harmonic finish. We had this harmonic pretty darn close to an A, B, and the B was a Gartley, almost 61.8, and this is a little bit overshooting the 78.6. So it's fair enough to say that there's a Gartley in there. What we look at after a Gartley, let's open this up a little bit, is we look for an ABCD pattern. If there's another Gartley pattern going to set up. So we've got A, B, sorry, ABC. We've got A, B, and we've got C. We don't have any A, B equals C, D, C. We've just got an ABC. If we were doing A, B, C, D, we'd go A to B to C, and our D would bring us into where AB equals CD, would bring us into 39.45. We came pretty darn close to that, didn't we? Pretty darn close. So let's see if we do lose the 50 and the 50% and the 50 moving average, if it comes down to 39.5. So that's another point we'll take a look at. So let's revisit this stock on Monday. Looks like a really interesting one. What I like about it is that it has rallied twice in the past, right? It's come down, it's rallied to this one. I don't want that. I want to get rid of that, and then I want to get my grabber, and it's pulled back, it's rallied, pulled back, and it's rallied strong. Now it's pulled back. So there's really some patterns here. I mean, if you wanted to try and see if there were any overarching, any really big long-term Gartley patterns, you could do that right here as well. So let's just see if we can't find a big Gartley, and we can't. Let's see if we can find one in here, and we can't. See if we can find one in here, and we do, where we've got an X, A, B, C, D. So we did have two Gartley patterns in a row. This one came down to the B. I mean, Motive Wave calls this a Gartley pattern, but look where it finished. D, right where the new one started. We've got X and C, A and D are the same. So two Gartley patterns in a row. Let's just keep an eye on this one. So let's delete that one and not lose focus on the current one. This looks like a good stock to track, and we're going to. So talk to you again after market close on Monday.